Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market as well as the Mag 7 stocks and going through various indicators to see if we can get a feel of where the market will be going in the near future. So let's start off with fear and greed. And as you can see, CNN bordering on extreme greed, pie vesting also. Well, this one's actually in extreme greed area right now, so above 77%. Couple things I'm watching for, just keep in the back of your mind, and I'll scroll down here so you can see the bottom. So look for that October to November range right between here. Usually, this is just an average ever since 1950. The S&P has one last decent-sized correction, typically leading into the election. So again, if we do get a dip in markets sometime in the middle to end of this month, don't be surprised by that, but it would, by the looks of this chart, be a buy the dip type of scenario. A couple other things to keep in the back of your mind, and we talked about this a lot when the Fed first cut rates back in September, but that going into rate cuts, there's typically two ways on average that the market likes to go. Now, I've been making the argument or the case that the S&P resembles more of the dark green line. We even had the yen carry trade 10% correction, which you can see here, 5 to negative 5, back in August. That happened before rate cuts. So seems to be following the chart pretty well. And the S&P even in all-time high regions. So if by a month or so we are not going down but up, I'd say that we still have some time to go as far as before any recessionary type of concerns, and we'll get more into that. Another thing to keep in mind is that it's more to do with the rate and the amount of which the Fed cuts. So typically when they're cutting very fast and very large, that tends to be pretty bad for the market in the near term. However, I don't want you to get stuck on this 50 number. I know a lot of people are talking about that. Well, 50 was bad in the dot-com bubble, great financial crisis. Yes, the Fed cut by 50. However, they are not meeting to do any cuts this month. So 50 basis points over the course of 2 months, that's an average of 25. So I've been making the argument that I feel we're in a 1998, more than a 2019, but a 1998-like scenario. Yes, there's inflation concerns as well. But as you can see in 98, they cut, they held, and then eventually they raised rates. We'll show you that on the chart as well. So actually, let's go into the charts just for a moment. And we'll take one last look. This is crypto fear and greed. You can see crypto falling further into fear, and it's been on this downtrend, but right now just kind of stuck in between this high and low. So crypto, I do videos on various things with crypto, Bitcoin, the cycle, mining stocks, altcoins, even do some live streams occasionally on Fridays. So subscribe if you're interested in that. So this is the S&P 500. And let's zoom in on the daily. So as you can see, we are still in all-time high territory. As far as targets for the S&P 500 go, you guys can see here that ever since the great financial crisis, this drop, the S&P 500 has been in this upward ascending channel, not ever getting higher than this, and not really ever outside of the COVID crash back here in 2020, getting lower than that. So as far as the ranges are concerned, we can just draw other parallel channels along the way, and a target, if we were to draw this trend line out and try to keep that as parallel as we can, you can see that would be in the low 6,000 region. If it really got overextended, you can see the numbers there on the right. We'd be looking at upper 6,000s, maybe even as close as 7,000. So if the market did get really stupid bullish, and I do believe we are in one of those historical secular bull runs. It's been going on since the great financial crisis back here. But if we end up ending in a bubble that pops, then don't be shocked or surprised if the S&P gets up to these areas. And if it does, whether it's anywhere in that 6,000 range, you might want to consider, of course, nothing I say is financial advice, but might want to consider taking some profits. If stocks that you're in are doing a 5x in the matter of a couple of years, just do know that's not typical. So just something to keep an eye on. As far as the VIX is concerned, so you can see ever since the yen carry trade unwind, and the third largest volatility spike since the great financial crisis, the COVID crash. We only had a 10% correction. So I'm thinking of this sort of as an earthquake before a larger one happens. I don't know if there's any geology buffs out there like myself, but one of my side hobbies is like learning about geology. And typically before a very large earthquake, sometimes you get these precursor tremors, and I wonder if we are just going to get a number of these VIX spikes within the next couple of years, especially with the election coming. I'll be honest, I kind of feel a little bit surprised that the volatility's been so low going into this year. Been reading a lot about, I remember this in 2020 as well, all things aside, with COVID, of course, but how volatility is high in election years. And I feel like outside of the yen carry trade, really hasn't been that bad. So we did have a recent little spike this week, but we're still in high greed. So maybe that's going to come undone. But one of the charts I wanted to look at to see just in the short to medium term, this is, as you guys can see, percent of stocks above the 200-day average. And as we zoom out here, when you see these lows, take a look at the very bottom where the dashed lines go to October 23, September, October 22. Those were lows in the market. Of course, March of 2020, we can just go over to the S&P. You see October 22, October 23. So I just drew this trend line because we have the lower ends connecting, and I figured if we do get any sort of a dip and it gets below the trend line, areas I'd watch out for then going sideways. But regardless of that, we have just been going sideways here as far as the percent of stocks above the 200-day average. So it's hanging around the upper end of this range. You guys can see it's done that before falling off, many times. But we also aren't in an extreme spike either, like we were in January of 21. If we take this off log scale, it becomes even more prominent. So just kind of here in the middle, I'm watching to see if this starts to break either way. So have the buy sell signals on, have the Heikenashis trying to cut out the noise, but even this has just been chopping around. Another thing to keep in the back of your mind is the US 10-year, 2-year. This is the yield curve inversion. When the Fed, this is put as simple as possible, when the Fed raises rates, the yield curve tends to go inverted, and when it uninverts, typically there's a recession within the next 2 years or a market bottom. So you can see inversion, 2019, uninversion. This was the bottom. I put these red vertical lines where the bottoms of the stock market were. So uninversion, bottom, uninversion, bottom. And if you're wondering about the amount of time, and this will just be generally speaking, see there 553 days from that uninversion to the bottom. So about a year and a half here, 630 days, almost 2 years. So we just inverted right now. And if we were to go out about 600 days, I'm just kind of taking the average around there. You can see that'd be around April of 26. So that would be on average where the bottom would be. So we'll see. My feelings overall is that next year will be the end of the bull run. This is just where I believe the data is showing right now, that next year would be the end of the bull run, in 2026 into 27 bear market, but good long-term opportunities to buy. So it doesn't mean that has to happen, and there might be data that comes out into to that time that actually extends things a little further than we expect, or there could be a flash crash that comes out of nowhere too when people don't expect it. So trying to look for all the indicators and just be ready. But I guess just to put a nice bow on this, and TLDR, when we have this much uninversion for this long of a time, and the recession, this indicator is pretty much undefeated, just be cautious as far as long-term plays in the stock market. So if you're looking at any of these Mag 7 stocks that we're going to get into as long-term investments, do know that there is a possibility price could go lower. So buy a good amount too during these crashes in the S&P stocks, and we'll show you. Actually, we'll take a look at that for stocks today. what percent of drawdown you might be able to look for, as well as the moving averages. And before we get into all those stocks, two more things. Unemployment rate still trending upward, but we did have this little dip, and that went along with the job numbers being really good. So job numbers being good, that's what affected the as far as the yield curve inversion as well. It went down a little bit, and people were surprised, but that coincided with good job numbers. Last thing I want to show you guys is inflation. All right, here we go. Because you may have heard about that in the news recently, and the Fed has this target. I drew a red horizontal line there of around 2% in inflation going down. So overall, that would tend to be a good thing that inflation's going down for the Fed and the government. So we'll take one quick look at Bitcoin. Weekly, red candle, too early to tell where that's really going, but we'll get into that in future crypto videos. So let's take a look at NVIDIA. Let's start off with NVIDIA, and my God, you can see this week, what a candle. Let's zoom in on the daily. What a strong move. So you guys can clearly see, I don't have to draw a trend line here, but you can see these lower highs of a trend, and it broke above that. So it is getting up, and it looks like, even with these candles, my God, it looks like it's getting ready to challenge that former all-time high of 140. And if it goes, watch out. So, NVIDIA doing pretty great. And as I was talking before about secular bull markets and things to watch out for, if we zoom out here on the weekly time frame, you can just see with NVIDIA, this stock, it has something around a 3 trillion market cap. Yeah, 3.32 trillion. But you can just see that inside of 2 years, it's gone up 1,140%. So we already had a stock split, but it went up from 11 to 135. So did pretty much a 13x there, and or 12x, whatever it is, close to that. So that's not typical, and I don't want you guys to feel like that's typical and goes on forever. So pretty extended. Can it go further? Yes. One of the, funny enough, indicators, I was just curious because NVIDIA did so well. I was like, I'm going to throw on the Pi Cycle Bitcoin high-low indicator. And funny enough, let's get rid of some of these lines, that when cryptos hit this upper moving average, they tend to go sideways or down. But when we are in a bubble, they tend to rise above it and then crash. So this one, it's been getting above it. But if you were to look for some targets here, you could see that moving average getting up there, 150 to 160. So pretty crazy. NVIDIA doing pretty dang good. But yeah, it's just something interesting that I found before. Let's throw on our buy sell signal again and have on our EMAs. So before I was talking about, recessionary times, what type of dip can you expect? So let's say we get a recession in 2026. What's typical for a dip? And we'll just take the most recent big dips as far as the stocks are concerned. So you can see NVIDIA back from 2021 to 22, it went down 70%. How many of you would have liked to have bought NVIDIA back there or get a 70% discount on it? So let's say NVIDIA was to get a 70% discount from its all-time high. Where would that take us? Funny enough, we're at 70% right here. You can see some price action back here. So could NVIDIA in a massive bear market get down to this 40-ish level? Maybe. I don't know. Nothing's to say it has to do what it's done before, but just something to consider that when the S&P 500 is correcting 30 to 50%, sometimes these stocks can correct a little bit more. Microsoft on the weekly still red, coming down to the 50-week moving average. On the daily, it had a little bit of a bounce off the 200-day moving average, got up near the 100 and the 50, and looks to be coming back down to the 200. So showing some weakness. If it keeps hitting this 200-day, I'd be worried about it falling through the 50-week moving average, that orange line, and possibly getting down to this 0.5 fib or the 100-week moving average, somewhere around the 380 region. And just, this is a perspective to have, or at least that I have as far as big stocks are concerned. When you take a look at how often they are at the 100 or the 200-week moving average, whatever moving average it is. Look where the deepest value is, and then go back and look how often is it there. So we're just going to go back to the great financial crisis. Of course, Microsoft got freaking wrecked. You'd have to go to the monthly moving average, but you'd say once, 2, 3, 4 times, and then it really didn't touch underneath it, except, got down to it a few times there, for 4, 5, 6, almost, but not quite, 7, 8. So 8 times within the last 16 years. So that's once every other year that Microsoft gets down to this level. And we talked about this before with Apple when it got to the 100-week moving average. That was the last great time to buy. So if this does continue to show weakness and get down here, and Microsoft, in my opinion, is one of the best balance sheets in the world, top stock in the world, frankly, Microsoft, Apple, that might be a decent long-term play. Even if Microsoft gets a big correction, you might still get some good value there. So as far as last percent of sell-offs, you can see Microsoft here went down 40% in 2022. And let's go over to the GFC. What happened to Microsoft at the GFC from the high to the low? My God, went down 60%. So, right there, what did we say this one was again? I already forgot. 40 to 60%. So let's say Microsoft came down 40 to 60% from the top. Let's zoom in a bit more here. 40 to 60% from the top. So you can see 40%. My God, this is looking pretty bad. 40% right here at around 280. And there's some price action there, 60%. Well, there's 50% right there, which would match the bottoms of 22. 60%, you'd be taking a look at 186 Microsoft. Not saying any of that has to happen, but if it did have something around a 50% correction and match down here, I'd say, that'd be a pretty good long-term opportunity to buy. Again, this would be like if there was a massive recession like we had in the dot-com bubble, great financial crisis. And even though we can have those price targets, and those targets are going to change within the next year or two, do know there's other ways to look for those good buying opportunities. If I take off this buy-sell signal, I'm going to throw on a different one. So that, by the way, this buy-sell signal, the 10-20 moving average crossover with Fibonacci signals, it's a good leading indicator. I like using it in bull markets and bear markets. UT bot alert's more of a confirming indicator, even has on the nice little buy thing. But when we put it on the monthly, I like this a lot more. So you can see on the monthly, are you going to catch the very bottom? No. But overall, it's a good confirming indicator. And after the top of the great financial crisis, I mean, heck, if you just followed this indicator, you would have been able to sell near the top and then buy near the bottom. Now, as far as the profit sandwich is concerned, I know this isn't getting the exact bottom, the exact top, and you can zoom in on the weekly and use other indicators, if you will, like the RSI and stuff. But the way I look at it, getting profits is I don't need 100% of the profit sandwich. If I'm getting 80% of what's in the middle, I don't need to eat the bread as well. So think of it as what would that be? A low carb profit stock diet. I don't know what I'm talking about here. But anyways, that's one way I look at targets. After a bear market, you can look for confirmation as far as those buy-sell signals are concerned. But we're still technically in a bull market, so let's put that back on. And let's go to the weekly and Apple. All right, so Apple. Remember what I was talking about with the 100-week moving average, this light blue line? When we hit here, I was talking about, same with Microsoft, it's like a once every other year type of deal, and that's good value. Even if it got down here, I said, this is good value right here. And that was the last good area to buy. So if you got Apple here at 160, great. So Apple chopping sideways a little bit, has some higher lows, somewhat of lower highs. Let's take a look at the daily. So a little bit of bullishness. You can see here we have these 3 points and even one last little peak before. So Apple, to really challenge a former all-time high, you'd want it to get above 233. You can see that price number over on the right, 233. If not, it's like in this 50-day moving average, but if it gets below that, then maybe you could say it's reversing trends. But as far as bearishness is concerned, again, we're just going to do this. Maybe I'll do this for like just a couple more stocks, but you can see here as far as 22, how much did Apple dip from the high to the low? 30%. Okay, let's go over to the great financial crisis. How low? Oh, I gotta click it again. How low did Apple dip from the high to the low? 60%. So 30 to 60%. I guess that's typical for the best stocks in the world. So if Apple dipped within that range of 30 to 60%, what would you be looking at? 30%. Look at that, kind of near the 200 week moving average, around 30%, as well as the floors back here, 60%. Oh boy, if Apple dipped 60%, yeah, the sky would surely be falling, be down here at 90. So could that happen? I don't know. I'd say somewhere in the middle, 50 to 30% at worst. This would be, again, a couple years down the road, just something to consider is that depending on the heaviness of the recession. And there's another chart I saw somewhere, like how rare it is, like once every decade or every other decade or 50 years, how rare it is for the S&P to go down a certain percent. So if the S&P is going down 30% or more in the coming years, those are pretty good opportunities. And my philosophy, I know I showed you that buy sell signal before, but if one of the top stocks that I really love is down 40% and I find good structure and good weekly buy signals, I'll still take a risk and go in. Even if it's going down a little bit lower, I want a dollar cost average in and while it's going down and up. All right, let's actually speed it up here. I won't do that for the rest of the ones just so we can keep this video at a good length though. Amazon, still at that former all-time high line way back here. Now you guys see I draw fibs a couple different ways. You can do it from the low to the high. You can do from the high to the low. High to the low if the price is still within that range, which it is right now, but it's also high to low. It'll show good price targets above if you take the fib off log scale, but right now has some red weekly candles, doji, undecided. Maybe it's looking to go back down to the 50-week moving average at around 171, or you can see it wick to the 100-week moving average, and we have the 786 fib at around 158. So if you like Amazon, might not be the worst area there, and yeah, it likes that 200-day moving average, so 175 would be pretty safe area or good value area in the short term. Let's go over to Google. So Google been looking like one of the weaker ones recently, taking that 200-day moving average, even got below it, went to the all-time high, former all-time high fib line. This fib line, by the way, this fib is taken off log scale, and this is the 1618 area extension at around 193. So you can see that was an area where there is people taking profits right there. But Google right now underneath the 100 and the 50-day moving average, and just a little bit above the 200-day moving average. So is showing some weakness right now. It's really just one higher low, but not really. We have to wait for this move to finish playing out. Weekly, you can see green candles, but if this doji turns red like it has before, like back here, then yes, I'd be thinking about some possible further weakness back down to that 150 area for Google. So if you like Google, possible good areas to buy. Right now, I've seen some FUD in the news about Google being broken up from Google and Chrome, and I think last time the government tried that, it wasn't successful. I forget if that was with Microsoft, but it was many years ago. But when there's FUD in the markets and we see one of the top stocks, and I really like Google, I think it is good price to earnings ratio compared to some of the other stocks. If we get some good value, might be a decent long-term play. Even if we got one of those big recessions, that I'd still say that's not bad long-term value. The way I look at stocks is, do I believe, simple question to ask yourself, do you believe it's going to be around in 20 years? If your gut says yes, and you really believe that in your bones, I'd say that's a good stock to look into. But if you're hesitating on that answer, you might want to think twice about buying that stock. Of course, do your own research. Let's go to Meta. So Meta, man, looking great. The the stock for old people who complain about everything on Facebook, solving all the world's problems and poking each other. Um, Comment below if you still poke people on Facebook. Weird question to ask. But anyways, you can see it got above the 1618, and really it's been loving this 20-week moving average. We had the SMA and the EMA. Let's take a look at the daily. So the daily, what did we get for Meta? It got above 600, wicked above, and then daily sell signal. So you can see here, as far as what the moving averages look like on the daily, it doesn't really get that much lower than the 100-day moving average. So I would suspect that this 1618 could offer some good support. But if it did get lower, and you are in Meta, you would want that 100 to hold. And as far as bigger price targets, let's zoom out here. So again, this fib is off log to see some of those price targets. At 2618 at 865 would be the next area to look at. So if you got any Meta around here, may not be the worst area to take some profits here, just with how great it's moving. And the last one we'll take a look at, Mag 7 stock, is Tesla. Any of you guys see in the news the robo taxi that they showed or rolled out yesterday? Yeah, it looks quite ridiculous. Kind of reminded me of the robo taxi a little bit in, what's that, Total Recall from the 80s movies. So rolled out the robo taxi. Let's put this on auto. To save the stock, because look, it's coming down to the trend line, the 100 and the 50-week moving average. Big sell signal on the weekly. That ain't good. And another reason I have on Heikin-Ashi candles is usually the candles move in waves, so you'll get more than one typically. Not always, but typically. So if this is the hold true, then don't be surprised for at least a couple more. You know, it's 2 to 4 usually, sometimes bigger, of course. You know, it can have these big moves down. But if you are pro Tesla, you can see here we do have these higher lows. Weren't able to get above this area right here as far as making a higher high. Failed at doing that, so maybe it'll challenge again, and we might just be creating a large wedge pattern. But right now, you know, as I look at this here, looks like we are in, I don't know if you guys see that, but we have a channel here that it looks like, parallel channel. Don't always do this too often, but let's see if I can get this. There we go. So looks like we're in somewhat of a channel there, even if we brought that way back. Yeah, there we go. Kind of. All right. So not the not the best at drawing channel. There we go. All right, I'm getting it. I never got above a C in art class growing up, but you guys can see why. So right now in this channel, and if you're a Tesla bull, you could say, hey, we have higher lows, lower into the channel, zooming way out. You know, here's the thing. I drew this a while ago, how we were making these lower highs for a long time, and it broke out of that. All right, there's no denying it. Now we still want a higher high than this level right here, the 271. But if you're a bull, you believe in the channel, you like the trend line bounce from the lower highs, and things could possibly get bullish for Tesla. Why not? They finally rolled out the robo-taxis after Elon in 2019 said that there'd be 1 million robo-taxis on the road by 2020. That obviously didn't happen. But 5 years later, they showed the first robo-taxi. So we'll see how those do and if that ends up being bullish for Tesla. Anyways, guys, hope you enjoyed the video. If I do have time, I'll do a live stream in this afternoon. I'm not sure if I'm going to have time. And if so, we'll save that for next week. But comment below any stocks that you like as far as the Mag 7 right now, or thoughts or opinions on the stock market. Please comment below, and we can discuss those in future videos. So thanks for watching. Have a wonderful Friday. Take care.